So Tesla's now entering a really rapid growth phase where we see production doubling over the next 2 years. It's the Apple of our generation. We're beginning the age of robotics, and they sell the stock. Like, you've got to be an idiot to sell the stock after this earnings report. You just got to be a stupid idiot. And I was like, where in this report was the bad part? If we go from a 2% economy average to a 3% economy average over the next 30 years, so much wealth will be created in this country, I can't even tell you. If you're going to be holding Cathie's portfolio for a little bit before you make back your money.
Hello, everyone, and welcome to the NTG Market Update. We have a very special guest with us on today, Ross Gerber. Ross Gerber is the co-founder, president, and CEO of Gerber Kawasaki Wealth and Investment Management, an investment management firm with over $2.3 billion in assets under management as of the end of 2021. Ross also runs an actively managed ETF, trading under the ticker symbol GK on the New York Stock Exchange. GK focuses its investments on climate change, clean energy, and fintech, to name a few. Ross is also one of the most notorious Tesla bulls on Wall Street and has become an icon and one of the most influential investors in both the social and traditional finance media. So without further ado, I'd like to take the privilege to welcome our special guest, Ross. Welcome. And thank you so much for coming on with us. Yeah,
thank you for that kind introduction. Very nice.
Definitely, yeah. And also, just want to say as well, congrats on $2.3 billion assets under management.
Thanks.
Yeah, big accomplishment there. So yeah, just to get started in, right into it, I just wanted to obviously kind of touch on GK's largest holding, which is Tesla. Tesla earnings just reported this past week on the 26th. Profits up, 200% year over year. Revenue up about 75% year over year as well. Margins are increasing exponentially. What are your general thoughts on Tesla earnings this past week?
Well, I was pretty happy that I was able to buy Tesla this week. We picked some up in the fund at about $8.30 a share the other day. And I picked some up personally and for clients, and I haven't been able to buy Tesla for a long time. So I felt the gift of the stock going down the other day after earnings was like too good to pass up. So Tesla under $900 is a really attractive price for such an exciting company. So I thought after such amazing numbers, navigating supply chain challenges, as well as, continuing to break records in output for electric vehicles, and productivity in factories in North America, for example, you would think Tesla would have gotten a different reception on Wall Street. So it created an opportunity for investors, which we took, and now the stock's moving back to, where I think it should be, which is around $1,000 a share or more. Tesla is now entering a new stage of their growth or development as a business, from almost like startup stage and survival stage, which lasted up until about 2019, to now extremely profitable stage, even more so than we would have thought going back a few years. In the way we looked at Tesla, we didn't think margins would be as big or they would be as profitable so quickly as they continually investing so much money into their future. But with the imminent opening and production ramp of the new Model Y line in Texas, which ultimately will lead to a new factory in Berlin opening with another Model Y line, and then ultimately the Cybertruck line once supply chains, become more normal, which we suspect will happen in the next 6 months to 9 months, especially within the chip business. So Tesla's now entering a really rapid growth phase where we see production doubling over the next 2 years. And there really isn't any other company, big cap, doubling, So not only does Tesla warrant a premium in the market, but we think that their growth rates over the next 5 years are sort of incalculable. So as an investor, as I say, always, you just have to own the stock. Like I look at every stock, like every day, basically, and I'm like, and I own like 46 stocks, let's say. And I don't know why I own 46 stocks. Some of the times I'm like, I should probably kill like 5 of these companies right now because I'm not that happy with them, which I might do any day, But But when you look at what are the companies I'm most confident about, my top holdings where I have the majority of my money, I've never been more confident about the future of a company like Tesla, Microsoft, NVIDIA, and Apple, which are really our top 4 holdings besides battery technology companies. And I've never been more confident about their futures. They've never been in better positions. They've never been more profitable. The markets have never been bigger for them to grow into. We just added a bunch to our Netflix on the decline, and that's been paying off quickly. Another company that got overly sold that is a huge opportunity for long-term investors. So we're very, very bullish on companies like Tesla, but Tesla probably is the best company in the world by a large margin.
Yeah, I agree. I think Tesla is sort of the stock of the decade, at least.
Yeah, it's the Apple of our generation.
Definitely, yeah, 100%. And I think now you see a lot more people sort of catching on to that. And it's become a sort of an investment staple, even among retail and ever so growing institution as well.
Yeah, I mean, I think the retail investors got it a lot sooner than the institutional investors. I think it's more the institutional investors who are now catching up to the story and upgrades and, all this kind of stuff. All of a sudden, Tesla was like the downgrade party all the time. And so the institutions who now have to compete with the S&P know that they have to have at least an equal weighting to Tesla. And if they're not overweight Tesla, I think it's a huge mistake longer term, So our basic investment premise, about 20% of our portfolio is around climate change investments, whether it's solar power, inverters, batteries, and or electric vehicles, which is transportation, which we're most bullish on the opportunity. So we have Tesla, and we also have Polestar in our portfolio as well, and Arcimoto for these wonderful little EVs. So we have 3 electric vehicle companies, and we'd love to add Rivian into our mix if it gets real cheap, because I like Rivian, but I think the stock is way too expensive. And Lucid, we like the business, but we don't like the Saudi government control of Lucid and their desire to use Lucid for their own political and personal gains, not for the best interests of shareholders. So Lucid, as much as I like the company, is not investable for us, for the same reason Exxon isn't investable for us. And so, we think our exposure is the correct exposure in the EV market, and we expect more players to come to market with EVs. We're looking at Ford. If Ford can get their business worked out, they could have a wonderful future in the EV business. So there's a great future in this, and we think over the next decade, Tesla will lead a generation of clean energy companies that will become dominant, just like the Exxons of the world used to be dominant in the 80s when it was an oil-based economy. So it's really a unique time for investors.
Definitely agree. Yeah, I want to touch on both Rivian and Ford as well later on. But I think one thing that's unique is that I think institutions are really not discounting in this specific earnings as well. Some of the unique factors, which is affected sort of revenue and profitability a little bit, but which is the $340 million payroll tax that Tesla had to pay as a result of Elon liquidating. Yeah. And then also, I believe it's about that $250 million, a part of Elon's compensation plan, which isn't moving forward, over the next following earnings.
Yeah, I mean, although those are real costs, and so I don't want to discount those too much, but there was about 700 million of earnings that didn't count. You know what I mean?
Yep, exactly. Yeah. That's for sure. Yeah. And then what are your thoughts on TeslaBot? Elon sort of really nailed the hammer on this and tried to communicate to the best of his ability the real large impact that this would have on Tesla over the next few years.
Yeah,
exactly. So what are your thoughts on TeslaBot overall? And do you think that institutions aren't really taking it too seriously? I think maybe possibly.
I think they assigned a negative to it. I think
exactly.
I think that the institutions treated that as a negative, a lack of focus. You saw that through the sell-off. See, this is the thing that pisses me off. Okay. Elon says, I'm not going to do these calls again. I'm only going to come on if it's worth it now. I'm too busy. I got to prepare for these quarterly calls. I got to listen to 10 stupid questions from analysts, and he doesn't want to do it anymore. So then he says, I'm going to come out. I'm going to do this call and I'm going to give you a product roadmap and tell you what we're thinking about for the future. And he goes out and tells everybody what he's thinking about for the future, and the institutions panic and sell the stock. It's unbelievable. Like, we're beginning the age of robotics and they sell the stock. And I said it in an interview which looks better now because the stock rallied since then. But I was like, you've got to be an idiot to sell the stock after this earnings report. You just got to be a stupid idiot. And I was like, where in this report was the bad part? The bad part is that he's now identified an amazing extension of their business. Now, imagine if Steve Jobs released the iPhone and he said, oh, I also got this idea for this thing called the iPad too. And they sold the stock. It's the same idea. It's like, oh, he's not focused on the phone. The phone's still got all these issues. And now he's telling us about an iPad. Why do I want that? Sell the stock. And that's kind of what people, so most people in my mind, I think I get a lot of sort of attention because I sort of decipher Elon's statements. And then I tweet don't you get it? This is what he's saying. And then people are like, yeah, I guess that is what he's saying. And I'm like, I guess a lot of people just they hear one thing and then they don't hear the other thing. So what is a car? A car is a robot and it drives you and you control this robot. It has, no brain, 4 wheels, and this thing called an engine. And it really was a simplistic, dumb robot that took you from A to B. Okay. So then Elon created a brain for this and said, okay, now with 1,000 million variables of driving, now let's get you from A to B without you driving this manually. Probably one of the most difficult AI challenges you could ever ask for. Okay. So then he realizes as he's trying to build all these cars and stuff that there's certain repetitive motions and jobs that are hard to fill, lots of turnover, not great jobs, not great paying jobs. And maybe this is a great area for robotics. And he's like, if I'm already building eyes and I'm already building brains, boy, it's pretty easy to train this brain to do repetitive tasks. Now, if you go into a Tesla factory right now, half the factory is the most amazing thing you've ever seen. It's like robots and sparks flying. And it's like, if you were ever going to imagine this sort of alien dreadnought factory, that's half the Tesla factory. And then you go to the general assembly line and it's like an old school car line where people are putting together the wirings of the car and all that, because there's lots of wirings in a Tesla car. And that's why humans have to be involved. Now you look at some of these tasks and you say, why couldn't I build a robot to do this? And then it would take a huge burden off the amazing amount of labor intensity of building these cars, because we could take some of the worst jobs and replace them with robots, and we could program them with the same programming, the same stuff we're already building. But it's easier to build a robot than a car that drives themselves. And I'm like, didn't people get that he wants to build a machine that builds the machines? And if I'm going to build a machine that builds a machine, I have to have robots that accurately do the jobs that need to be done. And I don't think it's that hard to build these things. Okay. Then you go into phase 2. Every vision of the future has bots. Every vision of the future from Star Wars on, there's no space movie that doesn't have robots involved. Why would we imagine a future that doesn't have bots when we've always imagined a future with bots? So here's the guy who's finally going to bring this to us and sell the stock, so I think the opportunity for Tesla bots is enormous long-term. If you think 10 years from now, how will a modern factory look? Boy, Tesla bots could be an enormous business. But if you're caught up with your sort of these robots walking around a factory like R2-D2 and CP3O is fantasy from Star Wars and it'll never happen, you're wrong. It's going to happen. You're going to have droids. I was watching Boba Fett last night. Can you imagine Star Wars without a droid? I mean, half the job. They had this one that does all the cutting, in the kitchen, and it had 7 arms and it was cutting, And I was like, exactly. That's what I need. I need a cooking bot. So I think we all want Rosie, Rosie from the Jetsons, which many younger people don't remember the Jetsons. We all want Rosie, the robot, to come and do my laundry and make me breakfast and stuff. So that's kind of my dream for the robot is I wake up in the morning and robots made me breakfast and my wife's happy and the kids are dressed, but I think it's going to happen. And I think Tesla is the person to do it.
Yeah, if there's anyone to make it happen, I mean, it's Elon, right?
But I think that he's not focused on cars because he's building a robot is not the right process. He's trying to build as many EVs as possible. So robots are a solution for Tesla. just like Tesla Semi is a solution for Tesla first, because they truck batteries every day between Fremont and Nevada, And so it's like, when you think about solving the problems your company has first and then selling those to other companies, it's a different thing than like, oh, we're just going to manufacture and sell a robot. That's not what he's really doing. He's solving his issues with robotics, which he'll then commercialize. It's genius.
Exactly. Yeah, I think it's really short-sighted to kind of discount it and say that, he's not focused on vehicles and he's, moving on to this. But it's really nice to see as well that Elon mentioned in a tweet yesterday, I believe, that he's taking the lead on Tesla robotics.
He takes the lead on all these projects. Well, think about Elon. Okay, so you start the EV project years ago, and Model 3 really was the nightmare was 2018. So that was 3 years ago, where he was spending day and night sleeping at the factory and trying to get the Model 3 lines up. And we're trying to get to 5,000 cars a week, 250,000 cars a year. That was like the ultimate goal back then, to think we did 1 million cars this year. So he knows Austin's going to work. He knows Berlin's going to work. He's got this down now. So he's working on Elon's he's like a mental torturer. It's like whatever challenge is most difficult is the one he wants to try to take, and I respect that tremendously, because I get tired of taking on all these difficult challenges after a certain amount of time. It just gets old, but he just doesn't get tired of it. And I think that's what drives him. He's a very smart man, but I think the challenges to his abilities are what drives him more than the absolute intelligence level he has. So when you look at the problems like, oh, well, I've got labor problems and I've got safety issues and I want to increase production and efficiencies, and I can build robots because I already have eyes and I already got a brain and I already got the pieces. So why can't I just build robots too? And then the robots can help me make the cars. It's like a whole new challenge. So I think that's the way Elon looks at life. He's not here to master something and be done. He masters something. He's like, what's the next big challenge? And then he moves on to it. And that's why I'm an investor with him, because he doesn't solve challenges that aren't profitable. He likes to do things that make a lot of sense economically. And that's why I like TeslaBot, because it makes a lot of sense economically, and it's easy to build factories to make bots. It's easy to use the parts they already have to make bots. And to me, it solves their labor problems and repetitive, factory assembly issues.
Makes sense. Agreed.
Humans are tough, man. Humans are tough to manage. I don't know how many humans you manage, but I manage 41. And they're good ones. Now imagine a factory of 10,000 people and the dance that's done every day between the 3 shifts that come on and off, and the humans and the people's problems and the COVID and people get divorced and somebody broke their leg. And all of a sudden I could start putting some bots in here to, when somebody's sick. Sounds great. Sounds great.
Definitely, yeah. And Ross, so what are your thoughts on both 4680s briefly and also FSD? You're the most notoriously known as having the.
I'm actually the best driver in EV history, but or on the road, maybe among a sample of 3 people. But no, so let's start with the 4680 cells, because that was probably the most consequential thing he said in the conference call, was that the Austin assembly line Model Y production was going to use those cells right off the bat, which I've been trying to figure out for like 6 months. 6 months I've been trying to figure this out, and they won't give me a straight answer. And I'm like, why would you put like an old cell line next to a new cell line and then start with an old cell line, and the new cell line probably isn't ready. And then if you start with the new cell line, then it doesn't work. Then you got a stalled assembly line, and then they say, oh, we're building Model Ys with this structural battery pack, we're ready to go. I saw this all 2 years ago when I was at Tesla for the battery day, and I think it's the most consequential thing Tesla's done in a long time as far as technology advancement. And when you look at battery technology and you think about the way a current battery pack looks, which is almost like AAA battery, lined up on a big skateboard, and you plug all those batteries together. It's kind of a simple idea. The challenge is like getting it all to work and not explode and all that kind of stuff, and charge fast. But like the idea is you put like a lot of batteries on the skateboard and then you charge your car. okay, and you power your car. Now, if all of a sudden I would replace these AAA batteries that like this with like fist-sized batteries, which are like those D batteries, let's say, all of a sudden I need a lot less battery cells to make each car. So it's a lot less expensive and it's more powerful. And I don't need the structural battery pack now. Now it's actually the battery is the pack. That saves a lot of cost and weight. And all of a sudden you've got a way better EV than ever been created, like by 7x. So it's I think it's 7 times better, the technology. So when you think about a Rivian or a Lucid car, Lucid has great range on a huge battery pack. So Lucid is a super heavy car with a huge battery pack and huge range and lots of speed, but it is way over batteried. You know, like you don't need 420 miles. You just don't. Okay. Like my Plaid, 85 charges, let's say 300 miles, it's plenty. No car I drove before got more than 300 miles when I was driving a gas car. So, so to me, having so many, I think this slows them down. So many cells, such a big battery pack, it really slows down Lucid when you don't really need all that. So then all of a sudden, when you think about the efficiency of 7 times better batteries and the power you can drive from the similar size and weight, or which would be 7 times more, or 7 times less cells in that car, the cost structure just drops like a stone, and everybody's like, oh, like shouldn't be Tesla focused on the $25,000 car, which these batteries makes possible. But what Tesla basically said is, no, we're not working on this car because we don't need to work on this car. Let somebody else solve that. That's like an Arcimoto thing. You want a cheap EV, buy an Arcimoto. Arcimotos are great cheap EVs, $20,000. You got a 100-mile charge, you plug it into your wall. Arcimoto is a great solution for cities, and that's why we're an investor. But if you want a car and you want a car that can drive itself and be an amazing vehicle, they're not using this efficiency to make a cheaper car. What they're going to do is make higher margins and better cars and scale faster because they'll need less battery cells to scale. And so that's how Tesla gets to 2 million, 3 million, 4 million cars a year through battery tech. So this is why I bought more Tesla when it was down, more than robots or any of that stuff. It's this cell technology is a game changer. And once again, most people just don't understand this. I've spent so many hours studying battery technology and I literally don't like it. Like I like to invest in companies like Netflix, I know entertainment. I'm in Hollywood, it's like, I can tell you what are good projects, who's good and bad. That's easy. But when there's 2 areas I'm studying right now, which I hate, but I have to know more is battery technology and genetics, and because we're doing a lot of stuff with Moderna, Pfizer, Abbott, Illumina, Fulgent, like this whole biotech thing, because I'm a big believer in what's happening with genetics, but it's not my favorite topics, So I force myself to read and learn, and I have experts that teach me. And I'm very adaptable. But what I've learned in studying battery technology for what I've studied and from the experts I know is not only is what Elon doing in creating bigger, better batteries, but what they've done is they've changed the chemical composition inside the batteries to using iron, for example, and the way that they're manufacturing cathodes so that there isn't such a huge demand on rare earth, metals and metals that are conflict, areas or expensive. So not only are we getting this size, power, and production change, we're also getting chemistry changes, the LFG. So when you look at the entirety of what's happening here, it's much more massive than what people realize when it comes to the future of electric vehicles and the moat that Tesla has at being the leader in this business.
It makes sense, definitely. And then shifting into sort of legacy auto, do you think that some of these companies like Ford, General Motors, even Rivian, not a legacy, but sort of a new emerging EV, are being very overvalued, especially with the legacy auto, given the minuscule amount of EVs they are actually producing and the fact that the capital cost expenditures to begin shifting completely to EVs are not fully being priced into some of these companies?
Right. So you've got Ford, which is really the one I've been looking at. GM is not a player. Ford. So there's a couple things. Ford isn't overvalued because the stock is actually cheap on a PE ratio basis because of their legacy business. If they spun out their EV business, they would go crazy. That stock would go crazy. But they can't because that's the most valuable part of Ford now. So the reason I don't own Ford is because of the Ford dealership model, where the actual business model of Ford is more of a problem than the cars. So the concept of I build cars, I ship them to a dealer, and then the dealer sells them and I get my money, and then the dealer services them and makes all the margin. The dealers kind of have a way better deal than Ford. And I'm not sure the history of how these dealers, but my understanding was that Ford didn't want to probably take the risk of opening up dealerships themselves and spending all the money. So they would partner with these people who would sell the cars for them, essentially. So there's basically a disconnect between the people who sell Ford cars and the people who make Ford cars. And Ford and GM made money on financing the sale of the cars and a small amount of money on the manufacture. But the main issue was financing. That's where they would make a lot of money. Ford Motor Credit, for example. Then the dealers would get the service, and they'd have the lease services and the warranty service business, and then the post lease business. And then they would get commissions for selling the cars. But they somehow retain this sort of power over distribution that nobody else can sell a Ford any other way in this radius from this distributor. And those laws are well entrenched in our society and in our governments. And so Ford has a very big problem if they want to transition to being an EV company, is that people don't want to buy cars from dealers anymore. And so where do the dealers sit here in this future? And I can't find a place because they're so bad at what they do. So I don't see where the dealers sit in the future. So if you're Volvo and you're Polestar, which is a company we're investing in, GGPI, Polestar is using the Volvo dealer and sales model to support their brand, even though it's a separate brand that came out of Volvo. So they get the upside. So Volvo is going to have their own cars and their own EVs, but Polestar is going to get the upside of using the service centers and using the dealers when they need to, but not because they have to. And this is a much better model, and why we invested in Polestar as a standalone company, and the model that Ford really needs to go to. But the problem is Ford is selling their EVs under the Ford brand and not a separate brand. And so the dealers aren't going to go for this because the EVs don't need service. So that's a whole nother problem for Ford, is if you make a car that doesn't need service, the dealers aren't going to be very happy, because we all know what happens to a car in year 3 and 4, right? You got to spend thousands of dollars on stuff, brakes and this and that, So Ford, I think, is properly valued currently. And I'd like their problems to be less than they are, but they're bigger than I think is solvable. So it's not an investment I'm making at the time. Rivian is a whole nother story. Rivian is a story about a company with lots of ambitions and customers, but no track record of actually building anything. This is opposite of Ford, right? So Ford builds millions of cars a year and they just need to transition. Okay, that's not as bad as Rivian's never built a truck. Now they're building trucks, and they're trying to build and scale day one. Remember, Tesla started with the Model S, and they spent 5 years building Model S's and making mistakes before they made mistakes building the Model 3. You know, they made mistakes on the Model X. They made mistakes on the Model S originally. And then they made mistakes on the Model 3. And it almost killed the company. So this whole like ramping a EV production line is kind of a nightmare and super difficult. And Elon says it over and over again. Prototypes are easy. Production is hard. He's absolutely right. I went through this firsthand. I went through this daily with Tesla in 2018 and early 19. And I've physically can recall the pain of 2018's Tesla Model 3 ramp. And I'm sure Elon says it's caused 75% of the grief he's ever experienced in his life was the ramping of Tesla, you know? So I think that's where Rivian's at. So it's wildly overvalued. I don't know what it's worth now. Let's say $50 billion for a company that hasn't produced a truck. I know they have great future orders and all this kind of stuff, but it just doesn't matter if you can't supply the truck. I suspect between supply chain issues, a lack of experience, a lack of ramp, they are going to struggle just like Lucid is, and they will struggle. I hope they can get it right because I like the companies. But I also fear that we were really lucky with Tesla because Elon is so smart that he was able to solve these problems that maybe are much harder for other people to solve. So we're going to see how these companies do. But boy, making EVs in scale has not been easy for anybody.
Yeah, Rivian, I was really surprised by. I couldn't wrap my head around the fact that, you know, when it was at the 180s, it's over about 1/10 of Tesla's valuation, despite the fact that, you know, you look at an investment like Tesla and you look at Rivian, and I just don't see a thesis of why anyone would buy Rivian at that price. I was personally short Rivian around there.
If you look at the bull case for Rivian, you know, so it's the same idea. Oh, well, what's the demand for pickup trucks? It's off the charts globally. So in theory, if Rivian can make 500,000 trucks a year, they would sell all of them. So I think the thought process of, okay, I sell 500,000 trucks at an average of $50,000 a truck. You know, I've got myself a $25 billion business. So $100 billion valuation isn't crazy. The problem is that 500,000 trucks part, you know, it's kind of like you meet a girl, you're 6 and she's 6, and you meet a girl in 3rd grade or 1st grade, and you're already extrapolating out that you're going to have 3 kids, live in a house in Massachusetts. And, you know, and it's like, so I'm going to marry her right now. Well, now that we're 6, because I've already extrapolated out the future we're going to have together in my head. And I can't imagine anything that could go wrong in this potential future. And so that's a really tough way to invest, you know, getting married at 6, hoping that this is going to work out. And that's kind of like Rivian.
Yep. And you mentioned GGPI Polestar. That's one that's very interesting. What are your thoughts on the valuation of Polestar currently compared to some of these early stage EV companies like Lucid and Rivian? And do you think the market's not completely pricing in their performance in Europe, their existing deliveries, and some of their line of models and the entire logistics behind Polestar compared to some of these early stage EVs?
Yeah, I think that's it. And so you got a company that nobody's really heard of. It's Volvo, which is never really, you know, these Swedish people are not, you know, outspoken people. They're really nice and quiet type people, not opposite of Elon, let's say. They've built a wonderful vehicle. They delivered 30,000 of them, 30,000 cars this year, EVs. The vehicle's great. I like it. You know, it reminds me a little bit of the Mach-E, where it's a well-built EV without the brain, but a good car, and one that certainly is a great replacement over a gas vehicle. And it's a nice car. And it's a reasonably priced car. But what they have is this infrastructure. They've got the Polestar infrastructure, which is they're retooling a Volvo plant in South Carolina. They've got the Volvo sales and service center. So they've got the supply chain backing through Geely, which is the Chinese owner of Volvo. So they have these connections with Europe and China that other companies don't have. And that's, I think, the part that's most attractive to me is that Polestar isn't saying we're going to be a 100% American sales company. It's only 30% of the cars they're trying to sell in America, 40% in Europe, 30% in Asia. So they've got this great position in China because of Geely. They've got a great position in Europe because of Volvo, and they're building this brand here in the United States. And so as my basic premise is anybody who can build a good EV will sell that EV, that if they build these EVs, they will sell them. And so it's, once again, can they scale from 30,000 cars to 60,000 cars this year or whatever their goals are? And then I think their goal is in 3 or 4 years, they're going to get to about 250,000 cars a year. And that's where they're profitable. That's where they get to that, $20 billion range where you get closer to the $80 billion, $100 billion market value. Stock trades at about a $20 billion value today. Now, here's what I can tell you. So it's a SPAC from Alec Gores. The SPAC hasn't concluded. You can buy this stock now for a little over $10 a share. If there's any issues, you can now sell the stock back when the deal concludes for $10 a share. So you don't have any downside risk buying it now because you can say no to the deal and get your money back at $10 a share. So your downside risk is maybe 50 cents. Okay. They closed this deal in the first 6 months of the year. Alec Gores is one of the best businessmen I've ever met. Okay. This guy is one of the sharpest, smartest, toughest business guys out there. So with all the SPAC fraudsters out there, here's the one guy that's doing good SPAC deals. He did Matterport's great company. He just did Luminar, a great company, and he's done this Polestar deal. When he negotiated with the Chinese, this thing went toe to toe for a while. Chinese wanted 30 billion and he got it for 20 billion. So when you buy this SPAC, you know that the person who put his own personal money in, but also really drove a hard bargain getting the valuation to be fair for this company. And so if you buy it today, you're getting the same price Alec is getting and all the institutional investors are getting, which you didn't really get that shot with Lucid or with Rivian. And because people don't really know the company, you can really get in at the ground floor with all the other players versus like institutional players get in at one price and then all the retail guys have to like overpay for Rivian because it's like here's the gift. You can overpay for our institutional shares, So that's why I really like Polestar because it is trading at a valuation that makes sense. They've got a great opportunity in front of them and they're making a great car and they have great management. So I'm trying to invest in all the great EV companies at a reasonable price. And that's why I say I would invest in Rivian if the price comes down to a similar price of that Polestar's at, maybe 20, 25 billion, then it's probably worth it. But Polestar's done a lot more on the production and delivery side than Rivian so far.
Definitely agree. I think Polestar is such a great risk reward currently, and a really unique opportunity in the market right now in the EV space that I think is kind of getting a little bit of a not as much attention as some of these companies.
They just
aren't. I think are overhyped. Yeah.
Yeah, no, they've got a bunch of stuff happening. They've been opening up stores. I think they've got Leo DiCaprio is going to be their pitch person, who is just super passionate about climate. They have wonderful brand and marketing. I've met all the executives as well. Management is great. I love the company. I like it a lot. It's not the same as Tesla. It's much more a car company than an AI company like Tesla, but it's valued correctly. And so to me, the upside is, 3-4 years, they execute their plan. You're going to make, 2, 3, 4 times your money. That's the kind of investment we're looking to make.
Definitely. And then Ross, moving into sort of macroeconomics, the Fed, what are your thoughts on inflation in 2022 and the possibility of rate hikes?
Every year we have these things we talk about all year that end up being kind of pointless. And inflation is one of them. Inflation is the thing I care about the least. I'm worried about the least because I grew up in a period of time at the end of my childhood was the highest inflation in American history. So when I was a kid in the early 70s, when I was a little kid, was the highest period of inflation in American history. And it was because of the Iranian oil embargo back then. And oil prices shot through the roof. America had no other place to get oil. And our economy got devastated by inflation and high oil prices. And we had this thing called stagflation where the economy didn't grow and we had inflation. And the 70s was the worst markets, 69 to 79 or 70 to 80 was one of the worst markets between that and 2000 to 2010 because of inflation. But in the early 80s, Volcker and the Fed, they figured out they just had to raise rates through the roof. And, if you talk to some really old people, they'll still talk about when you could buy a government bond that paid 15%. It seems crazy today that a government bond paid 19%, but if you were buying bonds back in 83, 84, some of which, were coming to maturity just 5 years ago, we're still paying, 30-year bond paying, 15%. So that killed inflation. And from the 80s to the present, technology has been killing inflation. So technology moves faster than prices or goods. So the innovation that we've seen moves much faster than physical goods or prices. So we're seeing it right now with oil prices. Okay. There's nothing better for Tesla than $90 a barrel oil, because the higher oil prices go, the more everybody looks at alternatives. And if you look at a 10-year return of oil, you've made 0%. So you invested in oil 10 years ago, you haven't made any money. You invested in oil 4 or 5 years ago, you haven't made any money. Only people who made money invested in oil at the bottom of the pandemic when the economy was done. And now the oil people have stopped producing new oil because they need to force prices up. But the mistake they're making by doing this is incentivizing technology to come up with the solution, because high oil prices are the only reason we have inflation right now. It's the only reason. If you look at where inflation is coming from, it's energy and transportation costs. So shipping and it's oil. So in some ways, there's nothing better for innovation than $90, $100 a barrel oil. So the Saudi Arabians and the Russians can collect their checks today, but what they're ultimately doing is sowing the demise of their main source of income, because between the utilities and the way our energy system works in the United States now, there's never been a better time to go solar, buy a battery, and get an EV. Okay, there's 100 reasons. And one of the biggest is saving money. And you can save a substantial amount of money by doing this, going EV. And so inflation isn't my concern. My concern is the opposite, is that we have created a almost socialistic type economy at the same time as our population has aged dramatically. And these baby boomers are still working, even though they're on their last leg. You got 75 and 85-year-olds like my dad still working. I cannot get him to retire. He moves much slower than he did 30 years ago at the prime of his career, when he was less than my age, okay, or older than me, actually. So he's still working. And you look at the CEOs, or you look at the president of the United States. The president of the United States is so old, he can barely talk. It's embarrassing. And I voted for Biden, and, I'm mostly, I don't know what I am anymore. I'm mostly a Democrat. I'm an independent now. I've relinquished my Democrat title because the Democrats have gotten so bad at what they do. But you look at the president of the United States fighting with a racist, white supremacist Trump, who's 80 years old too. And I got two 80-year-olds fighting for presidency. And there couldn't be a worse thing for this country. So when you think about the aging of our country and the demographics around industrialized economies, you think about the socialistic bent that our country has taken, where now lots of people just expect to be taken care of. The biggest issue we have is deflation. And it has been for years and years, and it will continue in the future once we get past this weird pandemic up and down that we're doing. We shut everything down. We open everything up. Everybody goes out and parties and buys shit, and the ports get clogged and the prices go up, and labor, all of this is a one-time thing. This is not going to happen again. Okay. And so as we kind of come out of this post-pandemic period, we've got a good growth vibe going here. as good a growth 5 that I've seen. So that's super bullish. And rates are going to go higher to offset this. But what we're going to find is rates don't have to go up too much to kill inflation. You know what I mean? Like, people are like, oh, Fed's going to be raising 8 times, 10 times. I go, the Fed's going to raise like 4 times and the market will have enough. The economy will roll over. And that's why the market got hit so badly in January, because the market knows that if the Fed's too aggressive, this all ends. And they're not going to do this. They're not going to be too aggressive and kill this recovery in an election year. They're just not going to do this. And that's where I think there's upside in the markets if you're starting today, because the markets are discounting, 5 to 6 rate hikes this year, a very aggressive Fed with running off the balance sheet. It's like the hawkish Fed is priced in. And if that hawkish Fed comes, you're right, stocks will not do well. But I don't think that's what's going to end up happening, because we're going to see inflation come down pretty quickly as we get towards the middle of the year. And then I think once we see inflation come down, the howling will stop about it. We won't have to talk about it anymore. And we'll start talking about the real issue in America, which is getting people back to work. There's lots of demand for labor, and there's lots of people telling me they still don't want to work. And we created this sort of false expectation that the government will just give you money, unemployment will never end, and you can't get evicted from your house. So don't worry, you don't have to do anything. The problem is that's not real, and that's ended. And many people are having a hard time accepting that. And that's going to be the challenge that we face moving forward, is getting people back in the workforce and getting people back to work and getting our society productive again, because there's a lot of unproductivity still in the market. I think they're saying still 3 or 4 million people haven't rejoined the workforce yet. So inflation is not my concern. My concern is socialism and aging workforce. We've got a healthcare system that can't take care of our people. We have way bigger problems than inflation. So inflation's good right now. It's higher wages, higher costs. It's about time we have some of this working. It's a byproduct of a 6% economy. We go to a 4% economy this year. That's phenomenal. My entire career, we've been working around a 2% economy. So Warren Buffett said this: if we go from a 2% economy average to a 3% economy average over the next 30 years, so much wealth will be created in this country, I can't even tell you.
Okay, makes sense. And Ross, I wanted to briefly touch on some other GK holdings as well.
Yeah.
2 that I really like, Petco and Roblox. So Roblox mainly is one that's pretty interesting. We also did see the Activision buyout by Microsoft this past week. So what are your thoughts on Roblox in relation to that? And the massive market in Roblox, and as well as another piece of news that came out in relation to Roblox, Nike and both Nike and Gucci doing a deal in Roblox, sort of in the metaverse, with both Nike Land and Gucci both implementing their brands into the Roblox space.
Well, you mentioned 2 stocks I love, and both of which I've been adding to recently, even today. So with what's happened, so gaming is a whole nother thing than consumer products and pets, but gaming is one of my favorite industries, and metaverse is a really fancy term for us gamers to use to sound less geeky. And, but let's be real, we're gamers, and I don't know if you're a gamer, I'm including you. But I play Call of Duty, and I'm a Warzone guy, and I've been playing video games since they started, basically. And my kids brought me Roblox, a while back, and then they went public, and I started following Roblox, and I use Roblox. I play Roblox with my kids also just to learn about it. And what I found is that they've created one of the most incredible platforms I've ever seen for not just gaming, but commerce and social media. And that's what it's become. It's social media. So, I had to do some work I'm doing Fox News later and Fox Business News, and we're talking about Meta, and I hate Meta. And I think they're the evilest, worst company in the world, and they want to be the metaverse. But what they're struggling with is that young people aren't signing up for Instagram anymore. Young people aren't using their products anymore, and they're all on Roblox. So a young person today isn't going to grow up on Snapchat and Facebook like millennials. They're growing up on Roblox and YouTube. And so that is their social media platform. So when you look at commerce, the intersection of commerce and gaming this is the metaverse, is Roblox. So it sort of hit me like, wow, like if every kid is on Roblox and they all have profiles and now my kids are trading digital goods with, like they'll buy something on Roblox and they don't like it anymore. So they're trading and they're asking me about trading. And I'm like, my biggest concern is kids getting ripped off and kids getting taken advantage of in the ads. And Roblox has spent so much time and money creating a platform that parents are comfortable spending money on and feel are safe. This is so valuable. It's so valuable. It's something YouTube doesn't have. I don't like YouTube that much for my kids. I have to constantly monitor what they're watching. Okay. And then oftentimes I have to change what they're watching because it recommends garbage to them half the time. Okay. So YouTube is kind of a nightmare for parents, where Roblox is like a safe place for your kids to play. Okay. And I pay attention to both platforms because I want to see what's going on, A, for investment, but B, because I want to see what my kids are doing. So when you extrapolate out where Roblox can go, to me, it's one of the key pillars of the metaverse. And if companies like Apple or Google or Facebook or Amazon or anybody wants to be in gaming and capture the commerce and the youth combined, Roblox is the play. So you got some weakness now in Roblox. I think it's under $70. And boy, I mean, the Activision is kind of a broken company with great products, but horrible management that has lost a lot of the key assets, which are the people. So Microsoft has their work to do. They got these wonderful platforms that they can do it with, but they got a lot of work to do, and they spent $70 billion. So Roblox trades at half that. Granted, it doesn't have the maturity of the business, but I think it's got a better business in some ways because of the way that social media works, and they've captured all the young kids who are now getting older and getting into that shopping age. And you got the Nike deals, and they get the consumer products. Where on Warzone, you don't have any consumer products. You don't have any partnerships like you've seen with Fortnite and Epic. So Roblox, just a core gaming holding, and to me is the metaverse and is the cornerstone block that investors who want to have a digital future investment should own this stock. So that's Roblox. And honestly, there was this thing with Shopify and Coinbase. One of the Shopify CEO is now on the board of Coinbase. And that's that intersection again of digital currencies, NFTs, and crypto with consumer products. And this is our theme and our basic premise in GK is this bridging of the digital world with the physical world. Not that the digital world is all encompassing and everything, and I want this fake art. No, it's that there's this bridge happening. And the bridge between the physical and the digital is now happening, and it's creating so much opportunity where it's like, if my kids really like shoes in the metaverse and they buy them on Roblox, they could just buy the actual shoes and they would be shipped to their house, and then they'd have the real shoes that they want to wear the outfits that their avatars have. There's a whole thing about to happen, and it's big. It's commerce, gaming, digital, physical. So what was the second stock? Petco. So Petco is based around our pet themes, and it's a totally different thing. This is just more that humans are in desperate need of love and attention, and they've turned to pets. Relationships with other humans hasn't been as lucrative or emotionally satisfying for humans as maybe in the past. And I think there's a lot of reasons for that, mostly because of Facebook and the way social media has actually made us less social. It's anti-social media. And so in the 60s, people used to go to a party and they take lewds and all have sex. And that went on through the 70s until HIV came around. And then when I was growing up, people all, I guess, smoked weed and drank and then had sex after much more discussion, than in the 60s and 70s. And maybe that was the 80s and 90s. And then as we entered the 2000s to the present, kids basically got these devices where they could date and meet and socialize online. And what's happened is they're not having sex and they're living at home and they're miserable. And I mean, I was even in a club in Vegas the other night and trying to avoid COVID. And I couldn't believe all the young people just sitting at the booths, like looking at their phones while it was like amazing DJ light, everything shows going on. So they've become antisocial. It's really devastating to mental health. So we've seen a huge decline in mental health, and people have kind of filled this void with pets. And not one dog, it's two dogs, and now the dog, I saw a dog in Venice yesterday, and the dog had bad legs, and the dude had fastened like a wheelchair to the dog, and the dog had wheels on his legs for his back legs, and he was like walking the dog, but the back legs didn't work, and he had wheels. And I was like, dude, this dog needs to go down. Like, I'm sorry, your dog is like suffering, man. But they'll spend any amount of money and whatever, because Rover might be dying and miserable, but I'm not letting Rover die. So we did some research, and we invested in the pet industry many years ago. We started with VCA Hospitals and a company called Trupanion, and we made money on these things. And the pet health industry is even better than regular pet, because now people are treating pets like humans. So when I was a kid, if your dog was sick or something, you put your dog down. There wasn't really a treatment for cancer. It was like, your dog's going to die. It's got a 10-year lifespan anyways. You had him for 5 years, he's dying. Now that's like blasphemy. People will spend any amount of money. They'll do anything to save the dog's life. The dog will get an extra 6 months of life and die anyways. And they'll spend 10 grand, So I'm not faulting people for their emotional, needs in modern society, but I'm certainly happy to profit off of it. And that's where Petco comes in. So Petco is a business that's been turning around. It's a retail and online business. They've moved into healthcare, which is really crucial so that the stores can act for pet health, as well as buying and products, and to pick up products and food. And they have an online business. They have new management. I think they're best in class when it comes to pet retail. And I think their connections to customers are pretty good. The stock is cheap, it trades at around 20 times earnings, and it's growing. And I don't think this trend changes. We also own Zoetis. They make drugs for pets. Also a great business to be in. So those are the two pet investments we have right now. I'm a big fan of this. And if you see all these people who are crazy about their pets, you're going to want to maybe own a little bit of the pet business,
Yeah, the stats are staggering. I read about 70% of U.S. households now own a pet. So it's only growing, and the insurance aspect.
And not just the owning of the pet. It's the spending on the pet that blows my mind. People buy their pets presents now and clothing. People literally treat their pets like humans. And that's basically the theme in GK, is that pets are living better than humans in many places, like in Venice, California. So if you go to Venice, California, where we have a huge homeless problem and people living on the streets everywhere, and then once again, people literally buying their pets lunch, while homeless people are sitting outside staring at them. So that's Venice, California. And so when you see stuff like that, you're like, I got to invest in the pet business.
Definitely, yeah. And before we wrap up, Ross, I just wanted to move into the crypto space and just get your overall thoughts on Bitcoin going into 2022. And I know there's one stock that's sort of big in the Bitcoin space, Square. I know you guys recently liquidated your position out of Square.
But we sold Square. We just took some tax loss harvesting, but we own Square, unfortunately.
Okay. And what are your thoughts on Jack Dorsey sort of moving to focus into Square, and their movement and change of their name to Block, sort of focusing on a blockchain, and what I think is sort of a meta-esque kind of a change in their name. What are your thoughts on that and Bitcoin in 2022?
So overall, as I was mentioning earlier, I believe the crypto ecosystem is greater than the current financial system. It's better. And I think the integration and utility that can be created through payment systems in crypto, especially globally with companies like Shopify, which we mentioned, or Amazon, give crypto a lot of potential. And I think even from a governmental perspective, as a reserve currency or a store of value, I think Bitcoin has a long future in front of it. And right now we can't even get traditional players to even play, like with an ETF and things like that. So we have found in our experience with our partnership with Gemini and with our clients, there's just tremendous demand for people to own digital assets and store them somewhere safely, so this is just so early in the overall ecosystem of Bitcoin. I think in a lot of ways, things got ahead of themselves in that, everybody's like, oh, Bitcoin is going to solve every problem and boom, it's done. And I was like, well, it can solve all these problems, but somebody has to do it. And that's the stage we're in now, which is crypto is mainstream accepted. And I think almost most young people have crypto now, if you talk to younger people. But what do they do with it? And so they found some utility in buying and selling NFTs, which they will find eventually no utility with. And then eventually they're going to see like, there's utility for a certain amount of transaction type stuff or smart contracts. But in essence, the greatest utility of Bitcoin is not being a part of the financial system. That's the greatest utility of it, is that it exists outside the financial system. Because the hardest thing in the world is going into Bank of America and getting a loan. So if crypto can solve issues like lending, boy, the banking system has a lot to be worried about. And I think they will. And I think Jack Dorsey is one of those guys that's going to do it. I went onto the Square app the other day and it said, file your tax return now, just click here for free. So I clicked on it. And of course, they're not filing my tax return. It's like 130 pages. So I don't think I qualify for that one. But I thought, for, a good 30% of people, their taxes are simple. And click, 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 my tax returns filed is the future. Okay. It's not going to be TurboTax. Okay. It's going to be people like Square who already are ingrained in your financial life. Square, PayPal, and Coinbase are the three positions we have in GK in my firm that represent, I think, the fintech revolution and the best opportunity to build an ecosystem. Square already has half the ecosystem built. So I think for Square, they have to find where they go from here. Okay. So you've got readers and merchants. You can buy it on the Cash App, but they've got to integrate this all into a system. Kind of like why I like the Coinbase Shopify thing better. So what's happening is I've become less bullish on Square and more bullish on Coinbase. And Jack has become a little bit more trying to be like an Elon Musk of Square, like being on Twitter and like trying to be this like Elon Musk, but he's not. And then he changed the name to Block when Square had built such a great brand. And Block is a horrible name. Like for a lot of reasons why it's a horrible name. Like he didn't think about just the imagery of a block. A square is the same as a block, but a square you don't perceive as negative, but a block you do. When you think about a block, it's something that blocks you. Like I do advertising. I do marketing. Okay. That's my thing. I went to the Ann Arbor School of Communications. Okay. And so when I see stuff like this and corporations that spend probably tens of thousands of dollars on teams to try to come up with these names and things, and then you see these moves like Meta and Block, and you go, this is just desperate. It's a desperation to seem relevant versus building off a brand that already was relevant. So that's my concern with Square right now, is that they got too good. They got too many things going, and now they've kind of lost their way. Like what's next? So if we don't really make money on merchants, okay, we do make money selling people Bitcoin. That's easy because we're making, 4% a transaction or whatever. But like, they don't probably make much money on lending, so it sort of gets back into this business of like, well, where does this end? Like, where's the profitable part? Where does this end? And I think investors are starting to ask those questions. And that's the problem with Square, where Coinbase is a brokerage firm. Coinbase is an app where you buy and sell cryptocurrencies and now future NFTs and digital assets. It's one that millions of people use, and they charge a fee, and it's transparent, and they make billions of dollars. But if they integrate with an ecosystem like Shopify, which is a way bigger and better ecosystem than Square, Square's got a big competitor, a scary competitor.
Definitely. And last question for you, Ross. So What are your overall thoughts on growth stocks and how much they've been hit over the past few months? And some of the hyper growth stocks like Zoom. I know I heard you say on a previous interview that you were looking at Zoom, but you'd like to see it drop more. It dropped pretty significantly since then. Are you looking at Zoom at all? And what are your thoughts on some of the high growth strategies, specifically ARC strategies over the past year that we've seen take quite a hit?
So the way markets work is it has its things, like things come in and things come out. And you have to know when areas of the market are working for you or not. And it's irrelevant of the companies. So a company like Zoom is a perfect example. So maybe Zoom now trades at 40 times earnings and it's growing very, very fast. So it's valued maybe correctly now. It was wildly overvalued. Now let's say it's valued correctly. But if Zoom executes with their business plan over the next 5 years and they keep growing at 30%, you're going to make great money buying Zoom today, right? Fine. I think that premise makes sense. The problem is nobody wants to buy Zoom today. Why? Because what's the story? What's the story? The story moving forward isn't more and more companies adopting Zoom, more and more schools adopting Zoom. No, the story moving forward is people are fucking sick of Zooming all the time. Okay. So the sooner people can get back in the office and the sooner people can get back to face-to-face meetings, the better. And that's what people want. So how does this affect Zoom's business? We don't know, but we know that Zoom has been wildly efficient for my company and we're not getting rid of it. And we spend a lot of money on Zoom every month. So that's good. But we also know, like, it's real bad for business travel. Perfect example. But we also know that we won't be using Zoom more than we used it in 2020. You see what I'm saying? Like, So the momentum isn't going to be with Cathie's names right now. She's like, innovation's never been cheaper. And I go, no, innovation's actually just priced correctly now. See, I think that's the difference between me and Cathie. She seems to think that innovation has no valuation metric that's high enough. Like she'll buy Coinbase at the high, she'll buy Robinhood at the high. She doesn't seem to care that the stock might trade much lower and she could have bought it at $12 instead of $35. Okay. Why? Because she doesn't care about valuations. It's clear that she doesn't wake up in the morning and say, you know what, what's the valuation of Coinbase when I bought it? We bought Coinbase too. We just waited and bought it way cheaper. We bought 35% cheaper than ARC. Why? Because we just waited. Okay. So right now, the next phase of the market isn't in high PE, high growth technology names. It's just not. It's not going to be. Rates are going higher. It's a great, strong economy. Look at UPS today. UPS, boring company. They ship crap. Numbers going off the charts. Dividend up 40%. Best numbers I've seen for UPS in years. The economy is great. Industrials is what's doing well. The John Deeres are doing well. People are out. They're the MGM. We added to our MGM stick. I went to Vegas. Couldn't believe how busy it was. Couldn't believe how much money people were betting. It was like $50 tables everywhere. Couldn't find a $25 table. And I'm like, this is prime pandemic. It's packed. Okay. The going out trade is what's happening now. MGM, Vegas is where it's at. So we took a big position in MGM. We have a big position in Blackstone, bricks and mortar stuff, real estate. We have big position in real estate. I love Lennar down here at 7 times earnings, the demand for homes. So mortgages went up. That doesn't change. There's no homes for sale. Everybody's trying to buy a house. There's no homes for sale. So if I'm building homes, logistics centers, Prologis, so like we just invest in different areas than she does. So we have innovation. Technology is about 27% of my fund. Innovation, fintech, AI, that's part of what we do. But real estate's 15% of my fund too. Home Depot. People are at Home Depot fixing up their houses. And so I think that her fund and stocks are going to have a little bit of time here before they start coming back because that's just not where the money's going right now. The economy's growing. It's a reopening trade, and industrials are doing good. You got 7%, GDP. You got inflation. You got oil as your top performing sector. You gotta look at what's happening. So I don't think the high PE growth stocks are where it's at in this part of the market right now. So I own a certain amount of them, but what we're buying are low PE stocks that pay dividends, like Pfizer. I bought a little Pfizer. 15 PE with earnings going up with a 3% dividend, that, and rising, that's attractive. Abbott Labs, I think a lot, Moderna got cheap, so you got companies trading at 4 times earnings, Fulgent Genetics and Moderna. Try to explain those PEs. Is coronavirus gone? No, it's worse than ever. So there's opportunity in innovation if you find the low PE stuff like Moderna. That's innovation. But if you look at Zoom and it's trading at 40 times earnings, it's properly valued now. That's basically what it is. Is there upside? Sure. Is it going to happen on the short term? No. But if you're going to be holding Cathie's portfolio for a little bit before you make back your money, what we do as a multi-thematic fund and as a long 30-year investor is we rotate to where the puck's going, and the puck's going towards, sort of solid industrial companies right now, and that's where it's going. And that's a good thing actually for America. And it's a good thing for the Dow. So you have the Dow outperforming the NASDAQ by a substantial amount, right? And we're more levered to the NASDAQ like Cathie. So if you can see the difference in our funds, because if you take my fund and Cathie's fund, and we both have the same top holding as Tesla, Arc Innovation and GK, and then we have the same amount of stocks. We have 45 or so other stocks. Okay. And we're both investing for growth. And if you take when my fund started in July to today, and you look at the performance, I think we've beat Cathie's fund by over 30%. That's insane. She's diverged from every index, every investor by such a large amount. The fact that she hasn't adjusted to this is really insanity in my mind. And so I love that she rides her ARC down as much as she rode the ARC up. But as an investor, you got to sort of move on from her portfolio because it sucks. It just sucks. It's not the portfolio that's going to do well right now. So you might get a bounce back in some of these names, but none of them are cheap. And Robinhood sucks, and Teladoc sucks, and Zoom. It's like some of them aren't so bad. Maybe Teladoc, or I don't know, but the valuations make no sense. It's going to be a tough time. So do I love growth stocks? Yes. But we look at it from growth at the right price. Growth at the right price. Where can I get growth that's greater than the PE rate? And you can find that in many stocks today. And those are the stocks you want to buy. Like a Petco. It's a growing company. It trades at a PE that's below its growth rate. And if Petco executes, it's less than $20 a share. It's worth 30 in our mind. You got a 50% increase if they just execute this year. God willing. So I prefer, we must understand where the tides shift in the markets as they do over the years. And so every period has different themes. And with COVID, technology shined. It just shined. We all adopted tons of technology because of COVID. Okay. But COVID is over now. And now we're looking at enormous healthcare costs and needs. We're looking at a reopening, getting our society back to work. We're seeing enormous amounts of money being spent on fun stuff, leisure, travel, domestic. Okay. We're seeing no lack of demand for anything, theme parks, whatever. And so we really got this growing economy trade going. And that's really what we're looking at now. What's growing economy trade? So if Netflix gets real cheap, I'll buy that because it's Netflix. But I'm not, a good 65% of my portfolio is not levered to tech and climate. Look at it that way. So we're much more levered to the consumer, and the consumer is doing real well right now.
Yeah, you mentioned a metric you use, price earnings growth, to value some of these companies. So I definitely really agree with that. Thank you so much for that, Ross. And so before we wrap up, do you have any final thoughts for the viewers? Anything you'd like to add, specific market-wise, macro, specific companies?
Well, I think, if any advice I give constantly is the importance of not doing anything a lot. Investing is a long-term thing, and we tend to get really, really caught up with the day-to-day market fluctuations and our day-to-day values of our portfolio, and spend not enough time really studying the businesses we own and what their opportunities are and who the management is and how well they're executing their business plans. And that's where I spend most of my time now, not trying to trade markets that can do a lot of different things. So predicting the Fed and inflation is not the issue. The issue is what are earnings going to do in the companies you own over the next couple of years. So I think as an investor, one must not overthink these transitionary periods of time, as we go through rising rates and a normalization of our economy and like, oh, I'm going to buy and sell this, or I'm going to sell this. What we really need to think about is where are the greatest opportunities for our generation this decade. And then we just need to buy those stocks when they get hammered, because there isn't much more to it than that. You just buy, dollar cost average, invest, but buy great companies. And that's what we try to do in my fund and with my clients. And what we've done over my career of now 28 years is buying great companies like Apple that I've owned for so long, my whole career. And it still is making me money, And so like, it's not that hard. I think we tend to overthink this entire process. So if you own a stock like Tesla and it goes down, there's no reason for you to be upset or panic. They just reported the best quarter they've ever had. It's an opportunity. Netflix just reported the best quarter they ever had. Apple just recorded the best. Microsoft just reported the best quarter they ever had. So when stocks go down, they get hammered. And I look at my portfolio and I go, I can't believe my portfolio is down 13% this year. But I'm like, wait, what the heck? This is such an opportunity. I love these companies. I know these companies like my brother, and they're doing great. So don't overthink it. You just buy low and you hold forever. And I think that if you own high quality investments, that's all you need to do, and you'll have tremendous wealth over the course of time. But if you think you're going to trade your way into becoming a millionaire in 6 months and all this kind of nonsense, that's not the way to do it. So I think we tend to overthink this process. We have great companies. We've talked about great companies today, and you buy these companies when you get the chance, when they're cheap, like today, and you just hold them. And if you buy Tesla for under $1,000, you don't have to think about it. If it goes down, you should be happy. You should be happy. And I think that's where most investors fail, is they're spending so much time worrying about day-to-day fluctuations and trying to be a genius. And they're missing, what do they say? They missed the forest for the trees, or they missed the trees for the forest? No, they missed the forest for the trees. And the forest is great. The forest is great. America's in a great position right now to grow and prosper over the next couple of years. So, you can't let the Fed and Powell and inflation knock you off track.
Agreed. And Ross, so tell the viewers where they can find more information on you, contact you, and where they can find more information on GK.
No, and GerberKawasaki.com is our website. We work with all types of investors from a financial planning perspective. We can help you build a financial plan all the way to complex estate and tax planning. We have GK Tax and Accounting, so we do as well your taxes if you want to do that. GK Crypto through Gemini, GK International if you're a foreign investor. We do business all throughout the world through our partnership with Von Tobel and Schwab. You can follow me on Twitter at GerberKawasaki.com, where I pretty much put it all out there every day. You can follow us on YouTube as well, because we put a lot of stuff out on YouTube. But most importantly, you can also buy our ETF. So if you don't want to do any of these things, you can just buy our ETF GK, listed on the New York Stock Exchange through Advisor Shares. You can get more information at advisorshares.com/GK. And our ETF is a really great way for people, whether you have small amount of money or a large amount of money, to get involved with an actively trading ETF that isn't going to produce taxes for you, but yet you have the ability to take advantage of this tax advantage that ETF has by having us actively manage it. So you can get all our top holdings, basically our portfolio, by just buying our ETF. And we use the ETF a lot now inside our firm as well, because it's so efficient, the tax efficiency and the trading efficiency of the ETF. So there's many ways you can get involved with my firm, but most importantly, whether you use me or not, invest for the long term, invest for growth, and try to be happy. That's, I think, the main goal in life.
Perfect, Ross. Yeah, I really love your fund. The allocation, how it's balanced, the specific companies in there are just top tier. So yeah. Just a reminder, this interview is sponsored by us, Northern Trading Group. Enjoy a free 3-day trial, link in the description. But yeah, Ross, I'd like to thank you so much for your time once again. It was a real pleasure speaking with you. We covered multiple topics and multiple companies in depth. So I'm sure the viewers will have learned a lot and have a lot of takeaways from the interview. So thank you so much again, Ross. And I hope we have you on back on very soon.
Yeah, thanks for having me, and thanks for being a great fan. I appreciate it.
Yep, of course, Ross. And I'll also make sure to link both your YouTube and Twitter and your website as well.
Yeah, please.
In the description. Perfect. That sounds great. Okay, thank you so much, Ross. It was a really pleasure speaking with you.
Yeah, thank you. Take care. Have a good day too.
Okay, yep. Take care. Have a great day.